Look, if you or your parents are over the age of 65, I need you to grab the TV remote right now, turn off those cheesy daytime commercials, and pay absolute attention, because what I'm about to show you should make you furiously angry. Want to know why? Every single day, I see hard-working people who paid taxes their entire lives, getting completely fleeced. By who? An insurance industry that profits off your deepest, darkest fear, leaving a massive financial burden on your kids. But here's the kicker. They don't want you to watch this video because by the end of it, I'm going to show you exactly how to bypass their traps, keep your life savings, and completely outsmart the Wall Street executives. Let me prove it to you. Let's do some incredibly simple math right out of the gate. Let's pretend you are a relatively healthy 68-year-old woman. You're sitting on the couch and you see an ad with a trusted, smiling celebrity. You know exactly the ads I'm talking about, right? They promise you total peace of mind for just pennies a day. So you call the 1-800 number. They pitch you a $10,000 final expense policy for just $85 a month. Sounds like a total steal, doesn't it? Well, let's look at the brutal reality. According to the Social Security Administration's own life expectancy tables, a 68-year-old woman today is expected to live another 17 years. If you live to age 85, you'll pay $85 a month for 204 straight months. Do you know what that math equals? $17,340. You just handed a massive insurance conglomerate over 17 grand out of your fixed Social Security income, just so your kids can eventually get a tiny check for $10,000. Let that sink in for a second. You are literally subsidizing the corporate bonuses of Wall Street executives by slowly draining your own checking account month by month. They don't want you to focus on this math. They want you focused on the guilt. And trust me, they are experts at emotional manipulation. They use buzzwords like protect your loved ones, or don't leave a mess behind. Let's be real with each other. That isn't financial planning. That is legalized emotional blackmail. And I am sick and tired of watching good folks fall for it. So, how do they actually trap you? Let's pull back the curtain on the hidden truth of the so-called burial insurance industry. The absolute biggest myth they sell you over the phone is the phrase guaranteed acceptance or no medical exam required. Sounds amazing on paper, right? You hear that and immediately think, awesome, they won't poke me with needles, they won't dig through my prescription history. I'm automatically approved. But here is the harsh insider reality you need to understand right now. Are you ready for the secret? In the insurance world, the phrase guaranteed issue is actually secret code for guaranteed to be the most expensive, overpriced garbage on the market. Think about it from their perspective for a second. Why wouldn't they check your health? When an insurance company refuses to verify your medical history, they have to mathematically assume you are actively on your deathbed. They apply the absolute worst-case scenario risk pool directly to your monthly premium. Here is where it gets totally unfair. If you are even remotely healthy, like your blood pressure is controlled by a basic pill, or your cholesterol is totally fine, you are violently overpaying. You are literally subsidizing the extremely sick people in that same guaranteed issue pool. It's straight up highway robbery. So why do they push these tiny $10,000 to $15,000 policies so aggressively on daytime television? Simple. The profit margins for the carriers are astronomically high. They know two things are statistically going to happen to you, and neither of them are good. Either you live long enough to vastly overpay for the face value of the policy, just like our 68-year-old woman example, or, and this is their absolute favorite scenario, you will eventually lapse. We're going to dive into exactly what that means next. The insurance industry relies heavily on what they call the lapse rate. They know that when seniors hit their late 80s, life happens. Cognitive decline sets in, a sudden hospitalization disrupts the daily mail routine, and then disaster strikes. Let me paint a very real scenario I've seen play out dozens of times. We'll call it the Icy Tuesday trap. You're 83 years old, and you've faithfully paid your $90 premium every single month for 15 straight years. You've poured over $16,000 into this policy. Then one icy Tuesday in February, you slip on the porch and break your hip. You're rushed to the hospital and transferred to rehab for 45 days. Here is where it gets dark. While you are literally learning how to walk again, your mail is piling up. That $90 premium bill sits unopened on your kitchen counter. The strict 30-day grace period comes and goes without a sound. Guess what the insurance company does? They don't call your emergency contact. They don't care that you're lying in a hospital bed. They simply push a button, cancel your policy for non-payment, and legally absorb every single dime of your $16,000. Your family gets absolutely nothing, all because you missed one single payment while fighting for your health. That isn't providing peace of mind. That is a legalized financial snare designed by actuaries betting against your memory. But wait, it actually gets worse. Let's talk about the most toxic poison buried in these contracts, the one that makes my blood boil. It's called a graded death benefit or a modified benefit. You'll rarely hear the salesperson mention this clearly. You have to read the fine print. A graded death benefit means there is a mandatory 24-month waiting period before the policy actually goes into full effect. Let's say you buy a $15,000 burial policy today and pay your premiums religiously. Fast forward almost 2 years, 23 months and 29 days from now, you suffer a fatal heart attack. Because you died within that 2-year window, your family does not get $15,000. They get exactly zero of the face value. So what do they actually get? A simple refund of the premiums you paid, plus maybe a token 10% interest. You basically gave a $1 billion insurance company an interest-free loan for 2 years, and your kids are left scrambling. They still have to pay the funeral director. The salesperson already got their fat commission up front. The insurance company held your cash, and your family is left completely holding the bag. This happens every single day across America to good, honest families. And there is one more silent killer. We have to talk about inflation erosion. Let's say you actually navigate the traps, you don't lapse, and you survive the waiting period. You have that flat $10,000 policy locked away in your safe. Here is the dirty little secret. The cost of a traditional funeral is historically rising at about 4 to 5% every single year. A modest funeral that cost $7,000 a decade ago is easily pushing $11,000 today. Let's look ahead to the year 2035. If you live a healthy, normal lifespan, that fixed 10 grand isn't magically increasing to match inflation. It is locked in stone. By the time your family actually needs to use it, the math changes completely. You won't believe how little it covers. That $10,000 might only cover the basic facility fee and the embalming. Your kids will still have to pull out their credit cards for the burial plot, the headstone, and the casket. The insurance executives know this completely. They are actively selling you a flat asset in a highly inflationary world. It's a losing game from the moment you sign the contract. But don't panic, because we are going to stop this right now. I'm about to show you the ultimate defense. In the next section, I am going to walk you through exactly what you need to do instead. I'm going to give you the specific tools that bypass the legal nightmares and shut down greedy agents completely. It's time to fight back. All right, now that you know exactly how the insurance trap is set, it's time to look at the final hurdle, the funeral homes themselves. Many of the local sweet-sounding family funeral homes in your town aren't actually family-owned anymore. Here is the reality check. They have been quietly bought up by massive publicly traded corporations, and they have a giant bag of tricks to extract maximum dollars from a grieving family. You need to know your rights right now. Enter the FTC funeral rule. Enacted way back in 1984, this federal law is your ultimate shield. When your kids walk into a funeral home, the director is legally required to hand them a printed general price list, or GPL. If they don't do this, if they just try to show them glossy brochures of expensive package deals without a printed, itemized price list they can physically keep, they are literally breaking federal law. But that's not even the biggest trap. Let's talk about the caskets. Corporate funeral homes mark up caskets by 300, sometimes 400%. They will walk your grieving daughter into a fancy showroom and subtly make her feel cheap if she doesn't pick the solid mahogany. Don't let them do this. Under the FTC funeral rule, you have the absolute federal right to purchase a casket from a third party. I'm talking about places like Costco, Walmart, or an online wholesaler for a fraction of the price. And here is the absolute kicker. The funeral home legally cannot refuse it. They cannot charge you a bogus casket handling fee. And they can't even require you to be there when the delivery truck drops it off at their loading dock. They hate when you know this. The government mandated this to crush local monopolies. But I promise you, the corporate director is never going to voluntarily mention your right to use a Costco casket. You and your family have to know the rule exists. So how do we pay for it? If we are canceling that garbage daytime TV policy, what do you do instead? I am going to give you 3 superior alternatives, starting with alternative A. This is the single most powerful zero-cost weapon. It's called the P.O.D. account. P.O.D. stands for payable on death. In some states, they call it a Totten trust. You absolutely do not need some fancy estate attorney charging you $400 an hour to set this up. Here is exactly what you do. You take your driver's license, your social security card, and a water bill. You march straight into your local Chase, Bank of America, or local credit union. Now listen to me very closely right here. Do not get distracted. The branch manager might try to pass you off to their in-house financial advisor to sell you mutual funds or annuities. You look them dead in the eye and say one specific sentence. Write this exact phrase down. I am here for a simple beneficiary designation update. I need your standard payable on death form. You need to bring the exact legal names and social security numbers of your kids to put on it. Why is this so magical? That money remains 100% yours while you are breathing. You can spend it, withdraw it to fix your roof, or move it. But the exact second you pass away, something amazing happens. It totally bypasses the system. That specific account instantly bypasses the local probate court. A judge doesn't freeze it. Creditors can't easily tie it up in months of legal red tape. Your kids simply walk into that exact same bank branch. With just a death certificate, the teller is legally obligated to hand them a cashier's check that very same afternoon. Boom. Done. You bypass the insurance middleman entirely, sticking your cash in a high-yield savings account earning actual interest. But wait, there's a catch. I can hear some of you yelling at the screen right now. What if I have to go into a nursing home? Medicaid will seize my P.O.D. savings account. You are absolutely right to worry about that, and that brings us to alternative B. The Medicaid spend-down rules are absolutely brutal. If you apply for Medicaid to cover a nursing home, they scrutinize every penny you own. If you have 15 grand sitting in that P.O.D. account, they will flag it immediately. What do they tell you? They will say, great, you have money. Spend that down to $2,000 paying for your own care before we give you a single dime. That is exactly where Alternative B comes into play to save your assets. Enter the Irrevocable Funeral Trust, also known as an IFT. Federal Medicaid law actually allows a specific legal carve-out for final expenses. You can take that cash and legally park it inside this trust. Look up IRS Section 685 if you don't believe me. This isn't some shady loophole. This is explicitly written right into the federal tax code because the trust is irrevocable, meaning you can't just pull the cash out to hit the Vegas slot machines. Medicaid legally cannot touch it. You no longer own that money. The trust owns it completely. It is legally ring-fenced just for your funeral. You pick the funeral home, you lock in the exact services you want, and you perfectly protect that money from both the greedy nursing home administrators and the taxman. But what if you don't have cash? What if you genuinely don't have 10 or 15 grand sitting around right now? What if you absolutely must buy an insurance policy? Then we move to alternative C. You fight back aggressively on the underwriting process. Never buy guaranteed issue blindly. If you are reasonably healthy for your age, maybe you just take a standard blood pressure pill, you must demand a fully medically underwritten policy. Force that insurance company to send a paramedical nurse right to your living room. Let them check your vitals. By proving you are actually in decent health, you force them to pull you out of that toxic high-risk pool and put you into a preferred risk pool. A standard, fully underwritten policy will cost you a fraction of the price. Make them work for your money. Now, we have to look at the state-by-state simulation because where you live exactly dictates how you play this game. Let's say you live in California. The State Department of Insurance knows these scams inside and out, so they gave you a massive weapon. Under California law, if you are 65 or older, you get a mandatory 30-day free look period for any life insurance policy. If you got pressured into buying a predatory policy 20 days ago, you can literally cancel it today. And what does the law say? That carrier must refund every single penny of your premium. No hidden cancellation fees. Over in Texas, it operates differently. Texas heavily regulates pre-need contracts. You don't buy a mystery policy from some call center based in Omaha. You keep it local instead. You walk into a local funeral home and sign a state-regulated contract. Your money goes into a state-approved trust, permanently tied to locked-in prices, cutting out the Wall Street middleman completely. And what about the sunny state of Florida? Florida is ground zero for nightmares. Florida Medicaid has a brutally strict 5-year look-back period. If you try to simply gift your kids 10 grand right before entering assisted living, the state will hit you with a massive penalty period, refusing to pay for care. This is why the IFT is crucial there. Finally, let's talk negotiation. If you find yourself sitting across the kitchen table from an insurance agent, you need to strip them of their power. You need to understand they get paid massive upfront commissions, sometimes 115% of your first-year premiums. No wonder they push it so hard. When they start their emotional sales pitch, you cut them off. You ask them directly, is this a graded death benefit or a modified benefit policy? If they start stuttering about a mandatory 2-year waiting period, show them the door, period. But don't stop there. Next, you tell them, pull my MIB report. That stands for Medical Information Bureau. It is literally the credit bureau for your health history. Watch how incredibly fast their tone changes when they realize you aren't a naive target. You are an educated insider. Your ultimate kill shot question is this. I want to see the policy illustration to age 100, and I want you to point to the exact line that guarantees the premium will never increase. If they can't provide that, you don't sign anything. We are almost at the finish line. All right, we have covered the brutal math, the graded benefit poison, the P.O.D. bank accounts, the trust loopholes, and the federal FTC rules. You are officially an educated insider, but knowledge without action is worthless. I am not here just to entertain you today. I am here to fundamentally protect you and your family's money. So I am giving you a mandatory 3-step execution list to complete this week. No excuses, let's get to work. Step number 1. Today, the very minute this video ends, I want you to walk over to your filing cabinet. Pull out any life insurance or burial policy you currently own. Ignore that glossy cover page completely. You need to flip to page 2. Grab a magnifying glass, if you have to, and read the actual definition section. Look for the exact words graded, modified, or return of premium. If you see those words, you are trapped in the 2-year snare, and it is time to pivot immediately. Step number 2. This Tuesday morning, not next month, not after the holiday season. This Tuesday morning, gather your driver's license, your social security card, and the exact legal names and info of your kids. Drive straight to your local bank branch. Look the teller right in the eye and say, I need to add a payable on death designation to my savings account. Get the form printed, sign it in wet ink, and demand a physical photocopy. Keep it for your own records. It will take you exactly 20 minutes. but it will literally save your family months of absolute probate court nightmares. You take back total control of your money from the system, which brings us to the final step. Step number 3, have the conversation. I know it is uncomfortable. Nobody wants to sit around the Sunday dinner table and talk about their own passing, but keeping this a secret only serves the corporate vultures. They want to pick apart your estate, call your son, call your daughter, tell them, listen, I am taking care of business. The money is sitting in an account at Chase Bank. My name is on it, your name is on the P.O.D. Hand them the physical folder. Take the taboo out of it. Give them the ultimate gift, total clarity and zero financial burden. You have worked way too hard for way too many decades to let a greedy insurance executive drain your savings. It belongs to your bloodline. It is time we stop falling for the guilt trips, stop paying for worthless paper, and start using the exact legal tools the wealthy use to protect their assets. Now, I have a massive favor to ask. If this masterclass opened your eyes today, if it saved you or your family from making a massive financial mistake, I need you to do 2 things right now. Hit that subscribe button so the algorithm knows seniors are demanding the truth. But more importantly, do this one thing. Hit the share button and text this video to just one friend or family member over the age of 65. The corporations rely entirely on us staying quiet and uneducated. But when we share the truth, we take our power back. Stay sharp, protect your money, and I'll see you in the next investigation.